Hello traders, this is Chris Buss with Traders Profit Compass with your Weekend Profit Navigator for Sunday, October 18th. Okay, what I want to do today, guys, is first hit the US dollar as it relates to gold, silver, and the miners, then move into the indexes, and then what I've done, something different for today, is I've put together quite a large list of ETFs that encompass quite a few of the important sectors and subsectors as we head into earnings season. I'm going to go through those, and then we'll wrap up with a quick discussion on Friday's price action. I received a ton of questions via email on what to make of how Friday traded. So let's get into it. Got a lot to cover. I will try to move it along pretty quickly here. Do have a lot of stuff to cover. Okay, let's get into the dollar. And it has been a confounding trade over the last few weeks. I had put together a thesis that because of the extreme short positioning of traders, that there was going to be a short squeeze in the dollar, and that was going to cause a further pullback in the precious metals and miners. And we got that initial push, and then over the last few weeks we had a significant down move, and during that down move the precious metals may have moved up marginally, but really didn't react in a big way. And then last week we got another stronger week in the dollar. I think the key going forward is this downtrend line on the weekly. It's almost impossible to, trade the dollar on a day-to-day basis. So although I keep the charts, I think the key is here. If we close above this downtrend line on the weekly chart of the dollar, I think there's a good chance that we head back up towards 95. There's still extreme positioning on the dollar on the short side, and I think any breakout is again going to squeeze the shorts, force them to cover, and then that'll be fuel to the fire. Notice, however, that the RSI is still bearish, as is the PPO. So from that standpoint, the dollar bears have been right, and these indicators, although there's, PPO is trying to cross here, the chart is still bearish. So the key is this downtrend line, and I'm going to be watching that next week. Now gold, this move here at the beginning of, I guess it was early part of last week, maybe the week before on a Friday, I have to check that. But anyhow, we got a breakout above 180, and that prompted me to get long the miners. As you know, if you're part of the group, we got long some December calls in the miners. But you can see since then, as the dollar strengthened throughout the week, that knocked the air out of gold, and now it's threatening this uptrend line right here. Of course, if that were to break, then lower prices would be favored, even all the way back here to this 171, 170 level. So that would be a bearish event. And of course, if it can pop back up above 180, then that would be a bullish technical move. And you can see all the moving averages have converged here. So I think there's going to be some relative power behind whatever move it takes. So we've got to be on our toes, especially with our long miner position, and watch these precious metals. And we'll see here on silver as well, pretty much the same type of a setup. A false move above 23, and then it has since fallen back below and gone flat, with all of the fast moving averages converging on this level. The RSI remains in bearish mode, as does the PPO. So if this were to break lower this week, it would favor a move back to this 20.5 where it tagged just a few weeks ago. So that may be a good trade, you know, both on gold and silver. If we see a break below, we'd have to quickly reorient ourselves to lower precious metal prices if the dollar, gains some strength and has its own breakout. Here's the picture on the miners. You can see that we had bought the breakout above 40, which was long-standing resistance, and now it has settled right against that level with a triangle formation right here. We've got some wiggle room, but it's not a lot. If gold and silver both were to make impulsive moves lower, that's going to hit the gold miners, obviously, and push it lower. So I don't want to see price move much below 40. So I'm going to be looking to, do something with that position. And just, not that it's cost us a lot of money so far, because it hasn't, but if price loses 40, why not just have a reset instead of hoping and praying that we're right? That's my thinking. And if the dollar moves down, we should see a breakout, and then we're going to be fine. But momentum is flat here below the zero line. That's not great. RSI is above 50, which is encouraging, but it's flattened out and has lost its kind of upward trajectory that we had seen earlier in the last couple of weeks. So the precious metals complex is very finely tuned, on an edge, can go either way. I wouldn't want to predict, it's going higher, it's going lower. It's all going to hinge on the dollar, and we'll just have to see. And I won't be embarrassed or afraid at all just to take off our long position if, price moves against us. We'll just reset and take it from there. Okay, moving on to the indexes. We've been watching this broadening top forever. It's formed over the last 3 years. And just in general, when you see a broadening top formation, it's an indication of instability. You can see, what was a dramatic sell-off in the early part of 18 looks like nothing compared to the sell-off that was in Q4 of 18 or the sell-off that happened in March. And you can see the subsequent rebounds are getting bigger and bigger. So that's not normal market behavior, okay? Does that mean that this, big red arrow down to the bottom is going to play out? No, it doesn't. But we have to be open to that possibility. Now, in the notes on the blog that I wrote along with this chart, if we get a breakout above 3,600, that's going to be hugely bullish, and that would give us a whole new line to shoot against should this break out and give us, a fresh bull leg to this bull run. then we've got a great line to shoot against. So this is just cautionary. It doesn't mean it's going to play out. But if this were to, get rejected here and we get a move down, then, then the downside scenario remains alive. But we're going to just trade it level by level. I just, from a technician's point of view, you always want to keep these things filed away, not as a big trading vehicle, but to simply illustrate this is not stable. This is not stable price movement. When you see, each sell-off be met with an even larger reaction and a larger sell-off again and again and again, it's got to end somewhere. And that may be with a new bull leg, or it may mean with a big sell-off. We'll have to wait and see. Moving on to the weekly. This week we put in a spinning top candle. And these type candles, especially when they're at the top of a range, they mark indecision. We had a big push higher, then it came back during the week, putting in this candle. If we were to get a big red candle this week, then it would tend to confirm that some corrective activity is to be expected. That would make that look like an intermediate top. And of course, if we get a green candle, a positive week, there's a good chance that that candle would be a breakout. So that would negate this look and then favor higher prices. Note we've got these bearish divergences that we've been noting for quite a while. That's not a sell signal, it's a yellow flag, and we've had them for a long time. So just be aware of it. I mean, right here, technically speaking, I think we're fine. The bull case remains intact. The uptrend is intact. We've had a correction. We're back up at the top. But now's kind of not do or die. But this week will be important. We're either going to pull back or we're going to break out. I mean, we're right there. So it stands to reason that, either one or the other is going to happen. On the daily chart, we had this big move out of our consolidation range, the $20 range, which pointed to a measured move of 360. We got up to 354, and we've put in several pullback candles. Now, I've drawn this as a potential bull flag. If we were to break out above 350 tomorrow, good chance it will run up towards 355, 356, and we could extend our measured move, which would point to our technical target of 360. And then if we got to 360, we will have, of course, broken out to new highs, and we can move up our stops towards this 355, 356 level, and then that can be our new support for going higher. On the flip side of that, you do not want to see price come below 340 back into this range. That would target a move down to 320. Whenever you break out of a range, you don't want to go back into the range, or else it targets the bottom side, and it would mark all this stuff here, all this price action, as a false breakout. So again, bearish divergences, cautionary, not sell signals. Right here in the middle of the range, hard to take a trade, but for active traders, if we were to break out above 350, you could use the bottom of Friday's candle as a stop if you wanted to see or play for a move back up to 355. Moving on to the Qs, very much the same look. Spinning top here near the highs. We had the prior trading range between 260 and 280. We want to stay above that. We noted that PPO, I put in a bear cross. It has not yet moved back above. So that bear cross is still in effect, although it has weakened dramatically on this up move over the last several weeks. So we just need to watch that. Of course, if we put in another green candle, this PPO is going to put in a bull cross and RSI will likely break out again. So some indecision there. We'll just have to watch this week how price trades. Big move up on Monday and then spent the rest of the week consolidating, pulling back slightly after that big move Monday. Again, I've drawn in what you could construe as a bull flag. If we were to break out above the flag, it would target this 300 area. And remember, that was our measured move target from this trading range. Adding 20 to 280 gave us a 300 target, which would bring us back to the new highs. Momentum here is at much lower positioning than it was on the first time up. You'd want to see that turn up and break out for the bulls to have a lot more confidence, especially here if it got up above 300 on that breakout. You want momentum to be pointing up on that move. And the same thing with RSI here. You want to see that breakout and not fall back below 50 and not have this roll over this week and put in a bear cross at a lower level. That would be a kind of a bearish move. And certainly, like we said on SPY, you do not want to see price come back in below 280. That would make this look like a false breakout, and then your target would be back at 260 again. I think this is one of the most interesting charts in the deck today. It's the relative performance of IWM versus SPY. We can see literally for years IWM underperforming SPY. The big rug pull, it's come up a little and has been oscillating in this consolidation pattern since June over the last 4 or 5 months. Now we've had several weeks of outperformance from the move down here at the bottom to the top of the range, and if IWM can break out here, we could see quite a number of weeks, even months, for a trend change in relative performance of IWM on this breakout. So this is something I really want to pay attention to, because what could happen is if there is a sizable rotation into cyclicals and value, and this breaks out, and there's a rotation out of, say, big cap tech, you could see SPY and QQQ fall back while IWM is ripping. And that's something I really want to pay attention to in the days and weeks ahead, because that's a trade we can jump on. We can rotate out of large cap names or big cap tech and jump on board some of the either on an index level, IWM, or find individual value names, cyclical names that we can jump on board, and that may prove to be an awesome trade. Because think about it, if fiscal stimulus occurs, that's going to be fuel to these stocks. So let's look at IWM. Here's the weekly, had a pullback and then a breakout from this long-standing trading range between 140 and say 157.50. We've got this breakout. 167.50 has been a level where over the last couple years IWM has stalled and had dramatic sell-offs. As we approach this level, if we were to break out here, that is a level you want to buy. That would be a significant technical event. Of course, resistance is still resistance until it isn't. So if you got long down here at the bottom of the range, or even on a breakout here above 157.5, stay long, stay with your trade, and watch how it behaves here at 167.50. If we break out, you can move all your stops up to that level, and traders who are not in the trade, I think that level should be bought, and then you can have a tight stop against 167.50, and if the rotation comes in and persists, you'll have a great trade location going forward. And here it is on the daily. We got this move above 160 and some consolidation. As long as price holds 160 on the daily, I think the bulls are fine. You don't want to see it drop below. You want to see it stay above, gain some momentum, and then finally break out here above 167.50. So on the daily chart, anything north of 160 is bullish, and on a breakout above 167.50, buy it. Just another word on the indexes. I don't have the charts here, or the tables, I should say. They are posted on this week's blog post, and that is on breadth. One of the things that the bears have held on to over the past, since the bottom in March, was that it was a narrowly defined advance. It was all, big cap tech, it's all the FANG names, nothing else has participated, blah, 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 blah. We know that. Over the summer, and now even more recently, breadth has really broadened out. And you can look at the tables on the blog site, and you can see that every sector except for energy has bullish breadth signals. So this rally has broadened out, and that can only be a good thing for the bulls. It's not narrow anymore. It's broad. We've got industrials, even financials participating. Yes, some are leading others. That's always going to be the case. But the top 6 sectors are all bullish. And even the smaller weighted sectors, your real estate and your staples and your utilities and your energy, except for energy, everything is participating. And that's a good signal. So it's not a narrowly defined advance any longer. Now, what I've done is create an ETF list that goes through quite a number of sectors across the markets. And here's why I'm doing this, and I'm going to continue to do this going forward. One, it gives us a bird's eye view of what sectors are performing, what sectors are not performing. But also, as we enter earnings season in earnest, starting this week, we had some financials last week, just to kind of the kickoff of it. But I really like playing ETFs during earnings season in the sectors, that I like or that you like, for the simple reason, let's say you like payment space, Square and PayPal and some of those names. If you hold those names through earnings, they could disappoint and basically wipe you out. But if you were in iPay, which is the financial payments ETF, you can participate in the whole sector, and if one name disappoints, you're not wiped out. So these ETFs can be a great way to play earnings in sectors that you particularly like, or for names that you track and think will do well over the earnings season. And then once earnings passes, you can go back to your individual names if that's how you prefer to play the space or those individual names. So anyhow, this is bots. This is the artificial intelligence ETF. It's been on a real tear, had several months of consolidation here, and has since broken out. It's in a rising channel. There is some bearish divergence, and that's something you're going to see on quite a number of these charts, is momentum waning but price managing to grind higher. And here price is just below all-time highs, above bullishly stacked EMAs. So I think this looks bullish. Internet index, we had a high back here in early September where we had the sell-off and now the recovery. What I don't like about this chart is we've got bullish divergence and what looks very close to being a double top. Not perfect, but you can see price has made a run back up towards the highs and has since pulled back. Now, as far as trading, I would want to see a new high, and I would alarm 205 for that. Let it break out, then buy it. I mean, give up the $2 between here and there. Make price prove it. And you certainly don't want to see price come back into this trading range here at, say, 194. So be careful of that double top look on the internet index. Emerging markets has taken out this trading range and is kind of toggling between 46 or 45 and a quarter and 46, which was the old high. Let's wait for that breakout above 46, and that would be a place to get long. Again, you see declining momentum. That would be cautionary, but not a reason to sell. But I want to see a breakout here above 46 to get long EEM, emerging markets. This is FinX, which is the fintech theme. Nice breakout, nice back test and hold. I like this one long against 40. Like many of the others, you know, slight bearish divergences, but trust the price action. You've got a fresh breakout. You've got a beautiful line to shoot against at 40. Stay long against 40, and if 40 breaks, exit your position. This is the hack, is the Internet Security Index. This looks a lot like the Internet Index. We had a high here, and then we came up and tagged that high again and pulled back. I don't like that look. That to me shouts out double top. You don't want to see price lose 49, or chances are this is going to pull back at least to 47.50, if not 45.50 down here. I want to see price break out here above 51 before getting long, or come back to a well-defined level at lower prices where you can shoot against it on the long side. That could possibly be here at 49, but that's an ominous look with bearish divergences on top of that. So this is a cautionary look. Be careful with this one. IGV is software. Right here at the highs, potential double top. I want to see that breakout above 335. Take out these bearish divergences, break out to new highs, and then get long against it. You certainly don't want to see price drop down below this little trend line I've got here. That could mean a pullback at least to like this 310 level. So right here at the top, wait for the breakout at 335, and then above that you'll have a great line to shoot against on the long side. This is healthcare providers. Nice breakout. Move higher in PPO. Don't have the bearish divergences there. Got a nice move on RSI. Move above the range here. I think you can be long against 210, which was the prior high. If you got a little pullback, a little check back to 210 that holds, great entry point. I think this one looks bullish. Medical devices, very much the same look. Small bearish divergence, but price action is positive above all the bullishly stacked EMAs. Breakout above 310. I think you can be long here against 310. Just set your stop just below. Really, when you think about it, what are we at? We're at 314. You know, what's $5 on 300? That's not a lot to, you know, as far as a stop goes. That's not a lot. So I think you can get long right here, and you know, if you did get a pullback of a couple bucks, get long against 310 with a stop just below. I think you'll be in good shape. Here's that iPay that I was talking about. Again, it's got that, you know, retag of the prior high. I want to see that breakout above 58 before pulling the trigger. I don't think you need to be a hero here and get long, you know, $1 below the old high. Just wait for it to break out. Make price prove it. You do have the negative divergences, and certainly if price were to lose this uptrend line, that would not be a great look. So that would favor a move back to 55. So alarm 58 in your system if you're bullish, and if you get that breakout, take it long. Home builders have been strong. This is, I don't have it marked, this is ITB. This is the home builder index. got the breakout here above 56.5, 57, grinding higher, bullish. Nothing really else to say. Got a decent trend line here off of lower levels back in April. Stay long against the trend line. I think you can. I think this is bullish. I think it looks good. Price above the 80 MA. I mean, it doesn't get any stronger than that. We missed a good opportunity down here to get long against these prior lows in the trend line. So that was, a missed opportunity. If you got a pullback here to trend, that would be a good place to pull the trigger long if you're on the outside looking in. Banking. I have not been a big fan of financials in general, but I have to say, they've been perking up lately. Had a move here off a key support at 34 and has moved up to 40 against downtrend resistance and has pulled back in what could be, construed as a bull flag formation. I would alarm the 200, which is at 40.31 right here. You can say 40.50, whatever. Even 41 if you want to be conservative at this prior high. If you got a breakout there and a hold above, then on a measured move basis, you're going to be up in the mid 40s. If interest rates tick up, that's going to be positive for the regional banks, especially the regional banks. I mean, it'll help money center too, but the regional banks don't have those capital markets that, JP Morgan and Goldman and all those guys have to help them. So interest rates are the key with regional banks. And I think the level here is the 200 at 40.31. I think anything above that, you can be long with this bull flag formation pointing towards mid 40s. And remember, KRE used to trade, just back in March, back in the mid 50s. So if banks all of a sudden catch a bid, there's a lot of runway up here. It's not going to get that in a straight line, of course, but breaking this downtrend line and recapturing the 200 would certainly be a good first step in financials starting to get some power. And remember, IWM is loaded with regional banks. So if we see IWM break out, that's going to be, positive and speak well of regional banks. So I would expect, if that happens, to also see a breakout here. And of course, we always got to look at the flip side. As long as price stays pinned below the 200 and the downtrend line, I don't think you can get long. Resistance is resistance until it's broken. 200, rejection. 200, rejection. 200, rejection. It's had trouble. So that makes that 200 even more important. So I think this is in obviously a critical spot. And if you saw rates fall, then you probably got, a short coming back to 34. Cannabis stocks have been in a massive downtrend for quite a while. Found support here at 10. Got a big boost by Kamala Harris making positive comments about the sector. I don't really think you've got to trade here short term in the middle of the range. I think you've got to see some forward momentum starting to take out this downtrend resistance and some of this overhead stuff. I think that's a tough trade right here to try to get long beneath all those resistance levels. Now, if you got to pull back to 10, that's a different story, because then you could get a move back up to 11.5, and you can get that 15% move. $1.50 on 10 would be a nice trade. But right here, I think you just got to watch and see how this resolves, either coming back down for another test of the low or breaking out. SKY is the cloud computing sector. Again, it's got this double top look that does not inspire a ton of confidence. With price right here at 84, I want to see the breakout before making some big commitment on this particular ETF, or a pullback into 80 where you've got a good line to shoot against for a move back up to 86. But right here, just below the highs, no, I want to wait and let price prove it. Now, what the bulls can put their hat on is prices above all the moving averages, so that's bullish. But you've got a level of resistance here that it has failed twice at, with some bearish divergences in place that are cautionary. So let discretion be the better part of valor. Alarm 86 in your system, and if you get that breakout, you can take that long with confidence, because you can set your stop just below, and if you're wrong, you get a paper cut. Here, if you're wrong, you could get a fast move back to 80, and that would be, a lot more painful. So I'd wait for the breakout here. Semiconductors. Now here's an example of what we just talked about. Got a breakout and a back test right here at 184, which held. That's a great level to shoot against on the long side. Semiconductors have been very resilient and strong, and unless they were to lose their breakout below 184, I think it looks good. So right here, with price at 186.5, you got, if you're willing to accept $2.50 of risk, you can take a long and look for a push higher if everything else stays constructive. If you're patient and want to wait for a potential pullback, set your alarm at 84 or 84.5, and if you get that pullback, hit it, and then you can use the rising 20 as your stop right here at 180.65. You could either do that or even higher, just right below this 184. That would be a nice stop for you. TAN has been a ripper for months, and I'm embarrassed to tell you that I haven't been participating in that. But this sets up pretty interesting right here. We had the breakout and almost a parabolic move over the last 2 or 3 weeks. Now, got a gentle pullback back to support here at 71-ish, 72-ish, with a flag formation. If we got a breakout here this week, the projected move is going to be, up towards the high 80s or even 90. I'd have to put the measuring on it, but it looks like a good strong move would be in the offing here on a breakout of this bull flag setup. So alarm that in your system, say about 75 for a heads up. I like that trade long, and obviously this has been a front run on the Green New Deal. Okay, all kind of potential government mandates with green energy. And also what you're seeing is oil with the ESG, the ESG mandates that are really, catching fire. These solar names are perfect for ESG funds. And you've seen relentless buying in a lot of these names as they go into these ESG-centric funds. And on the flip side of that, they're bailing out of their conventional energy, the oil, natural gas, drillers, all that kind of stuff. They're not acceptable in the ESG mandate, so they're getting sold no matter what. Valuation be damned. We're not allowed to buy them in that ESG model. So TAN may have, literally 10-year tailwinds as the move to wind and solar and all that kind of stuff pick up steam in the years ahead. And, if there's a blue wave, that will only be fuel to the fire. XRT, the equal weight retail ETF, I like this long. We had a prior high, a pullback, and a breakout. I think you can be long against 53. And if there's any kind of stimulus between now and the new year, you're going to see a strong holiday season. And I think you're going to see strong retail sales. We just had an upside surprise on retail sales this past week that did better than expected. Prices above all the moving averages, which is a plus. We do have the persistent, bearish divergences, but as long as price holds 53, I think you can be long. And, this is one of the ones where you could even look out to January, February, that would capture all of the holiday sales and take a longer term view of retail if there's, stimulus and the market stays productive. I would expect this to continue higher. And this would also fit in with the IWM value/cyclical rotation trade in a lot of these, apparel, and, Costco is in here, and, even Amazon, and all your digital retailers, your online retailers are all in here. And what's nice about this one is it's not all Amazon. Amazon counts the same as, the Gap. They're all equally weighted. So you're not 100% hinged to Amazon like you are in XLY. So I really like this. I really like this ETF, and I think it's represents a nice long, especially if the cyclical rotation takes hold. A few more slides. I hope you're still with me. IBB, double top look, has fallen back into this range. I don't like this one right here. First, I would want to see a breakout above 141. That would open the door back to the new highs. But I do not like this double top look and rejection. And if this were to play out further, a break below this uptrend line would be pretty bearish and would probably favor a move back down towards 130, the 200 here, and even possibly 125. I like XBI a lot better, not only because the chart's better, but if you do a relative performance between XBI, which is the smaller cap index, and IBB, you will see dramatic outperformance by the XBI. And here you can see it has broken out and is holding above 120. So from a technical posture point of view, I really like XBI a lot better than IBB. And as long as it holds 120, I think you can be long. I like the look of this one. TLT, downtrend line, gotten several rejections against it. Even if you're not a bond trader, set yourself an alarm at this 200 down here at 158. A break below the 200, that could be, I don't want to get too dramatic, but a doomsday move, because once the 200 breaks, there is not a lot of support coming down to at least 152, and I would expect a hesitation there, but below 152 is way down. And so what does that mean? TLT down means interest rates up. Interest rates up is bullish for the banks. So this would go hand in hand with outperformance by the financial sector. They would love to see interest rates pop. And maybe that comes on more fiscal stimulus. We'll have to wait and see. It hasn't really panned out like that yet, at least not in dramatic fashion. But we always got to look at the other side. If you got a breakout here above this downtrend resistance, say above 163, 164, and certainly above 166, then you got a path back up towards the highs. I can only really see that happening with some kind of massive risk-off move where people pile into treasuries. Right now, we're on a slow drift higher in yields and down in TLT. If you wanted to take an aggressive play, you could be short against this downtrend line and just stay with it until and unless price breaks above. You can see here that momentum has been bearish for the last several months, as has RSI. So the posture here is bearish. The big trade is on a break below 158. But other than that, it's been trapped in a range between 166 and 158. Okay, I got a bunch of questions about Friday's price action, which was pretty bearish. I mean, we had a opening gap higher. We had this is the QQQs, but you could look at SPY and all the different FANG names as well. Push higher for the first hour, and then they sold it off the rest of the day. Just taken on face value, I mean, that's bearish price action, and we lost this range here and back into this this trading range that we had before. Notice we still have an unfilled part of this gap down to 285.71, and I don't have it penciled in here, but you could draw a trend line off of the high, and we've got a series of lower highs, and then we've got lower lows right here. And if we were to come down here to 286, then we'd have, a lower low as well. So we really got to watch this. Now, it could be it was all OPEX related. We had October option expiration on Friday, and you never know really, was this all, an unwind of positions that, were coming off for the OPEX? Was it shenanigans? You don't really know. And it's impossible to unravel that ball of yarn. Was it fake? Was it real? We have to take it for what it is. It was bearish price action. Now, Monday, break back above, reclaim this 289, reclaim 291, reclaim 293. Those are all bullish moves. And if you're an active short-term trader, what we always say is, if you break down below and then recapture levels from below, those are bullish moves. If that happens, and certainly if we break back above 293 and hold it, then the door is open to a run back at the highs. But I want to point out a couple things. A bearish scenario, if we were to come down and lose this 286, there's really not much stopping it from coming back to 282 on the QQQ chart, and then that becomes an area that's really got to hold or else risk moving back into this big trading range that we had just broken out of, and we certainly wouldn't want that to happen. Certainly if you're bullish, because that would make all this price action look fake. And we've been talking about that in all these different scenarios where price has broken out from a well-defined trading range. You never want to see price come back in. And I also want to point out the posture of this PPO. If you've been following my work for any length of time, you never want to see PPO or momentum roll over just below the zero line. That's a really bearish look. You can see even on the RSI, it came up, could not hold 50 and rolled back over. So from a short-term standpoint, this whole setup favors lower. Now lower might mean, $1.50, come back into this low of last week, hold, and then reverse. I mean, that would be a double bottom look. A low here, a low here, and then a bounce. But if we lost that level, and certainly if we lost 286, that would be a very bearish look. And you can see the same thing on SPY. I'm not going to pull that one up here, and we'll cover that tomorrow morning in the Daily Profit Compass before the market opens. So we have a game plan on the indexes along with all of the individual FANG names. Those were kind of hit, and we had talked about on Friday morning or Thursday night, I should say, in the market on close recap. Watch Amazon for the lotto play. Remember that? If you're a subscriber, we talked about, Friday lotto play with Amazon. That played out like a champ. There was a tag of 3,400, and then it just fell away the rest of the day with over $100 move to the downside. I hope you were in that. I wasn't. I was asleep at the wheel, doing other things, blah, blah, blah. A lot of excuses, but if you were in that, you're having a great weekend, and that's set up beautifully for that kind of a play on a Friday with a stock that that we talked about could move $100 in a few hours, and that's how it played out. You never know how it will, but I know there was a couple people in the trading room that were on top of that and did really, really well. So congratulations to you guys if you did that. And for the rest of us, we'll have to wait for the next setup. So let's do a quick recap. Brett is bullish. Okay? The rally has broadened out. That's what we want to see. The charts remain bullish on weekly and daily time frames as long as we stay above those prior trading ranges, and that was 340 on SPY and 280 on the Qs. As long as we stay above those levels, it may be frustrating, it may be hard trading, but as long as we stay above those levels, the charts are bullish. We're heading into earnings. That's usually bullish. We went over a ton of ETFs. If you've got favorite names and you want to play earnings and you're bullish on a sector, find the ETF and play that way. That way you can hold through earnings without the fear of single stock risk of getting wiped out. It's a great way to play during earnings season. It's my preferred method when I have a particular view on a sector. IWM has been outperforming. We want to watch that relative strength on IWM compared to SPY. If we get that breakout, if IWM starts outperforming, we want to be in that trade in the value, cyclical rotation, regional financials. Those should all do really well if IWM breaks out on a relative basis. And remember, there could be a scenario where SPY and QQQ fall back, but IWM rips. So not every, there's a bull market somewhere, right? Like Kramer says, the bull market may end up being in IWM, but we need it to break out above 167.50, and we'd like to see that relative performance break out against SPY, and that would be like a double confirmation to get long IWM. We want to watch that in the days ahead. We didn't talk about it much, but 2 weeks before the election, be ready for volatility. Anything can happen. The VIX is elevated. We're in a high vol regime, and you can get 2% moves either way, just as a matter of business. So be ready for that volatility. Don't get too far out over your skis. Let's see if we can get a breakout this week or in the weeks ahead, possibly even right after the election. We'll watch it and we'll be ready if we see those breakouts. So I hope you found the content useful. Long video, but a ton to cover at week's end. A lot of stuff going on. If you like the content, please hit the like button, and certainly if you're new to my channel, hit the subscribe button and the alarm bell. That way you'll be notified of all the time I publish new content. And check over in the show notes. There's a couple links there that you'll find where you can register for my content and you get everything delivered right to your email box, and also a link to the website where you'll see a lot of interesting articles that'll be beneficial to you as an aspiring trader. Lastly, leave me some comments. Give me ideas for content on what you'd like to see covered. I will certainly work those into the coverage in the days and the weeks ahead. I'd love to do that for you. I really appreciate it, and I really appreciate your time on a Sunday afternoon. I know there's a lot of other things you could be doing at this time, but I appreciate you spending the time with me, and I hope you found it well worth it. This has been Chris Buss with Traders Profit Compass. Talk to you tomorrow bright and early. Good night.